Well, global markets still feeling the pressure in the wake of Britain's decision to leave the EU. U.S. Treasury yields hitting a record low today, while the British pound fell to its lowest level in over 3 decades as economic uncertainty in the U.K. has investors running to central banks for support. Joining me now is Wharton School professor of finance, Jeremy Siegel. You know, I think the economic implications, sir, of the Britain leaving the EU, I think financially still this needs to play out for us, and we really don't know what this is going to look like, including a UK recession.
Yeah, I mean, what we're seeing is a flight to quality. And what's quality? The government bonds, U.S. Treasury bonds. I mean, it's even surprising here. England goes to vote to get out of the EU, and the British Treasury bonds go to new all-time lows. So there's so much risk out there now with the banks, the Italian banks, that people say, I don't care the yield, just get me safe. I mean, I almost think we're in a bond bubble now. I think, I'm one of these people who've always said I don't think yields are ever going to get very high again or anywhere what we used to be. But even now I'm shaking my head at how low they're going. I think people are on a bandwagon now, and I think they might regret it.
Well, Jeremy, you know, you brought up something very interesting. As an Italian gal myself, the Italian banks, huge article on the front page of the Wall Street Journal today about what could be the implosion of the Italian banking system. We were talking about that last week. What could that mean for global markets and for U.S. markets? Could this have the same impact that the British exit could have or did have last week?
Well, remember what Mario Draghi, 2-3 years ago, we had the Spanish bank crisis and actually also an Italian bank crisis. And he said, I'm going to do what is necessary to keep the Eurozone going, extending credit to the banks as has to be done. Now, we in the U.S. cleaned up our banks tremendously. The liquidity ratios are very, very high. Stress test shows that virtually all of them are extremely sound. Europe did not go through the same vetting behavior, particularly the Italian banks. They're going to have to clean up their banks, but I do not think this is going to spell the end of the euro. Draghi is there. They're going to open the coffers, to be sure, to make sure none of those major banks in the EU and particularly the Eurozone area are going to fail.
So you're not predicting the fall of the European Union, because so many have.
No.
Because
in fact, take a look at what we had some actually good news if you're an EU fan. The polling of the popularity of the EU in countries such as even Denmark and others went up after Brexit. People said, oh, my God, look what's happened to England. Maybe, you know, it's a mistake to leave the EU. And secondly, really, any country in the Euro is there. They're not going out. If Greece never went out, they're not going out. So my feeling is that it's going to be a British problem. It is a British problem, okay, but I do not think it's going to spread to break up the EU. The only thing that's break up the EU is if the EU goes, the European Central Bank just goes crazy and starts printing money in a way that causes inflation.
Well, it looks like they're going to have to. It looks like the Europeans, the Bank of England's going to have to cut. What do we do? What does the Fed do? Do you think? Do you think that they stand pat and don't move? Do we actually see a cut in this country?
I wouldn't. I mean, I wouldn't want to see a cut because that means we're going to be going into a substantial slowdown. I think that really, obviously, no increase in July, and we'll see September. I would not rule out, though, if we get a strong economy, second half of this year, I would love to see a rate increase, saying, you know what, we think we can get back to a more normal economy. So don't fear one, and I don't think it's off the table completely for this year. I would love to see second half this year growth to be strong enough for us to take another rate increase. Well,
stay tuned for Friday morning when we get the jobs report. That's probably going to be quite an eye-opener for all of us.
That's what we're waiting for.
Jeremy Siegel. Jeremy, thank you.
Thank you.